Welcome to MyStockScanner Live on a Tuesday. If you want to keep up with the markets day by day, feel free to subscribe to our YouTube channel and join us through the week. As said, it's Tuesday and the trends are still early, but they're forming. Let's break them down. Two gents to answer my questions, Liam Flavelle and Hans-Henrik Nielsen. And Hans-Henrik, I'm going to start with you because we had a slew of Danish earnings coming today. ISS, Novo Nordisk, and DFDS. Any surprises?
Yeah, both positively and negatively. DFDS is a negative surprise and it drops today, but the other two that I'll mention today is there is some really good organic growth in the two others.
We will dive into the numbers in just a bit. Liam Flavelle, we had Palantir last night, explosive growth in revenue, yet down in the exchange today.
5%, I think, aren't they?
Yeah, well, what's the reality in that?
The market just isn't buying into that growth at the moment, but it's a weird one because the growth is real and it's really, really strong in their actual results and where it all came from as well.
Liam is our tech expert. We'll dive into the numbers from Palantir in just a bit. Once again, welcome to the show. As said, ISS, Novo Nordisk, and DFDS delivers numbers. And then we're also going to talk Ambu because the analytics the analysts for Ambu are really positive. They're talking an upside of 70%. We're going to look into it. Apple is exploring a new chip partner. We will tell who it is and what it means. And Alphabet, Google returning to the market with a massive AI bond deal, and why in Europe. And we also follow up on it's turning into a saga already, GameStop story, because Michael Burry all of a sudden sell all his GameStop stocks. We tell you why. And on the macro side, it seems like rates remain in focus in the US and Australia down under. Signals higher inflation. They just hiked the rates. Hans-Henrik will tell more about it. Is it just isolated to the land down under, or is it coming our way as well? Number of the day, 59% versus 41%. What that's in regard to, we will tell you later in the show. First, Danish trio up here, and Hans-Henrik, you already told us a little bit, gave us a little taste that DFDS, well, the ship is still sailing, I hope, but the stock is sinking.
Yeah, well, maybe not sinking directly, but if we just take a look at it, it's, let's just see if my computer will work a bit with me here. It almost looks like one of these pump and dump schemes if you look at the chart, which comes here. As you can see, some really massive growth here. We actually put a little arrow on here just to indicate that there could be an aggressive swing trade. Well, there were, and then they came out with disappointing earnings, some disappointing guidance for growth and so on. I'll actually not dwell too much on this one. I am more interested in one of the stocks that we already had in the portfolio. Sadly, we sold it, but we might want to re-enter. It's ISS, which is a really rock solid company. And they came out with some really good organic growth numbers today, as did Novo Nordisk. They were both expected to be, I think it was around 5% organic growth, and both of them showed around 7%. ISS have been known for growing by merging and buying and acquiring new company, but this is actually just standard old-fashioned organic growth. And as you can see on the value chart, it actually looks really good for a dull company like this. Just looking quickly at the Novo Nordisk to have that, it's not quite as good a quality. They have been extremely volatile in their earnings. Does seem like they're coming up with some really good growth now. Free cash flow have been a bit of a problem, but overall it's actually a decent company. We just don't like these big gaps in earnings.
Hans-Henrik, just a quick question, because there might followers of our portfolio and followers of our platform, and you can get a month for free if you go to the platform. You said we went into ISS and then we went out again. Of course,
yes.
On a day like this, you kind of go and you kick yourself. It's almost 5% up. But explain the reasoning for going out of that stock, but also let's just say that we are not afraid to go back in.
Oh yeah, definitely. I don't recall the exact day we bought, but I think it was around here, and we went out with a small loss because it went through the 50-day moving average here. So we sold around here with a small loss. No one, no matter what they tell you, knows where stock will go. So the ISS might have just dropped 50%. We have seen that with numerous stocks lately, or it might do as it has done here, come up here, have a little retracement and bounce. And to be honest, I'm tempted to buy this. Maybe not today, but let's see what happens tomorrow. And yes, we miss a part of the upside here. But as we have seen with one of our chip stocks that we re-entered, then that is just going completely crazy.
34% up.
Yeah.
Yeah.
So
There are some people that, the talented people that stayed in ISS. Completely
is that
by
the
mistake.
that's the day you took a nap and forgot to sell?
I was. Well, I think I was actually in a pub somewhere with a friend when you put the sell out. So
it's good for business.
Imagine being in the pub and missing. Well, anyhow, let's move on to something else. Let's move on to Palantir. Came out with numbers yesterday, and Liam, we are in your neck of the woods when it comes to tech industry, and Palantir just shattered everything. 80% growth in revenue, and yet they're dropping in the market today.
It's a very strange one, actually, because the biggest takeaway that I got from their earnings last night was their US company income. So that actually rose by, I think it was 106% or maybe even more. So, and that is solid AI projects that are actually bringing benefit to their clients, and that's what's shooting up. So it's sort of a proof that AI is working for companies, and we're starting to see that more and more, though the journalism coming out at the moment is a bit murky, because every day I open up to 2 or 3 reports that AI is starting to produce $3 for every dollar invested in one instance. That was a Stanford one. And then you've got a couple of other banks saying, nope, no one's making any money, and everyone's just piling it in there. So it's a bit weird. But looking at companies like Palantir now, and looking at the huge sort of scale that people are starting to put into the compute power that's required, then people are definitely making money. If I just show you,
Yeah, I was going to ask you to bring it up in the 3-point playbook, because we have a problem with how it's priced. That's no secret. We thought that it was priced to the moon, and the question is, are they growing into the pricing that they have?
Well, that's the interesting one, and I think you're absolutely right. We didn't buy them 2 years ago when they were going up because they didn't fit in the playbook. They didn't have the history to give us the quality, but now we have a quality score of 95. So they're a huge company. Earnings are going up through the roof.
You're not sharing your screen.
The rest
I'm
of
sharing my
us can
screen.
see it as well.
I just pressed the button.
There we go.
Absolutely.
You are a tech guy, right?
Well, so they tell me. So quality is 95, earnings per share going up through the roof, PEG ratio is fantastic, free cash flow and the returns are starting to pick up quite a lot. So absolutely awesome company. You can see, back here when they started going down, this is where they pretty much peaked, and that was December, the end of this year, so the last quarter. That was when they peaked, and that was when they were priced pretty much for where they were due to be reporting in. And the market has drifted down since then. And I think they still look at it in that way. The analysts are saying, there's not a huge amount of growth there. What we're saying is that even in the worst case scenario, back when investors were buying into it in 2024, it's been a lot higher since. If they priced it at the same level, if they had the same PE ratio that they were willing to invest at, it would double by the end of next year.
What PE are you having, Dalian?
That is a PE of only 161. That's that's where the difficulty is, and that's where everyone is starting to come back and say, I'm not sure I want to pay 161. That's a sort of, that's for the really good companies like Tesla, obviously, that you pay ridiculous PE levels. But what you do, the PE level is, but the PE level is effectively saying, you're going to see massive explosive growth, and that's why we get annoyed with Tesla, because they just don't, and they've been going down since then. Since we've been talking about it, really. Palantir, on the other hand, has that opportunity to really have explosive growth because they're in with the US government. They're massively in with companies now, and you can see that they've got a really good strategy of putting engineers into the company, so their own engineers work and get the projects over the line, prove themselves, and then the companies probably come in and double, treble, 10 times their investments in this stuff because it works. And so they've got the good model there. So if you want to take a risk, interesting one.
Let's just say that the word interesting is interesting right here. But I'm going to interest people in something else. I'm going to bring in Hans-Henrik and not talk Tesla because that would take forever. So I'm going to give him a Danish stock to take a look at. The analysts were out saying today that they expected Ambu to have a possible upside, a growth of 70% in stock value. Hans-Henrik, if we look in the 3-point playbook, is that sustainable? How is our
Well,
outlook?
it's actually interesting because Ambu is delivering equipment for the hospital, for healthcare, and if you look at it, it's actually a really good quality company, and they have had the earnings per share, the revenue is going up. You can see a PEG ratio that is insane here, but that is because you're taking price earning divided by expected growth. And we can see here that the expected growth the next 1 year is low, but the next year is massive. So this PEG ratio that we would normally like to see below 2 will get below 2 next year. So that it's just a little technicality. We can see the free cash flow is good and they can pay the interest on their debt and so on. What is or could be a problem if we go into the value chart is that normally we are looking at taking earnings per share estimates and multiplying it by potential different PE levels. In Ambu's case, it's a bit hard. They have been trading at 300, 400, 500 in PE ratios. And this is when we talk about Palantir trading at 200. It used to be, 800 in PE. This is the risk that no company can basically sustain 500 in PE or 800 in PE. So we can see the effect here. However, you can do another thing sometimes when you think that the earnings is a bit volatile or it hasn't been there at all. You can go down here and then you can compare, instead of earnings, you can compare to sales. So you're looking at price sales. And you can see here that at least the last 3-4 years, they've had a level where the price sales in the value graph, if you try and fit it into it something like this, is actually a fairly stable indicator of where the stock will turn. If that is true, then our bear case scenario is around 67%. And what did you say the clever analyst said?
70%. Yeah.
All right. So we might actually for once agree with the analyst here. There might be even more, but if this is correct, then there definitely is some upside in it.
See, how about that? We once in a blue moon we agree with the analysts all over the world and say that it could happen, and it definitely is below where it's supposed to be at the moment, and that makes it interesting.
I would say I think this analyst, this analyst with the 70%, I think it's a very high IQ analyst.
Okay, let's go to an equal high IQ when it comes to tech. And the voices that he hears when he talks tech.
No pressure.
Not at all. Apple is exploring using Intel and Samsung to build main device chips in the US. I have a question for you, Liam. Is it because they want to or because they have to?
I think it's a bit of both. Just to sit on the fence and really hedge my bets. The answer is, I mean, Intel have already been working with Apple for quite a while. They used to produce silicon for them, and I believe they do on some smaller projects at the moment. But this is a new opportunity. What they're effectively saying is that TSM, who make about 70% of the semiconductors in the world, and almost all of most of the advanced ones as well, are saying we haven't got any capacity, and that's where Nvidia and a few others, but Nvidia mainly, have really captured a lot of that. So they're exploring other people. The also ran the other company that used to be in the fab semiconductor fab business with Samsung. They haven't got a huge amount of capacity either, but they've got more. And Intel, they've been building their 14A architecture, they call it. It's a really catchy title. I don't know why they didn't call it something else, but it's effectively, they've been working on their Node 18 for their own internal purposes, which has been going really, really well. They've been working on this new set of nodes for clients, where clients come in and say, here's a map of the silicon we want you to produce. Can you go and do it for me? And that's what Apple are exploring now to do that. With these guys, with Intel, let's see if that button actually works now. Yeah. Wow, magic. I'm getting the hang of this. And you can see the reason we have stayed out of Intel, even though it was almost a no-brainer they were going to go up, was they've got quite a low quality score, and that was even worse a few months ago. I think it was 34, something like that, when we first started talking about it. And you can see why. The company, I mean, the technical word in IT is a shit show for the last 20 years or so. They've literally made the wrong decision time and time again. Their decision to start building this fab process about 5 or 6 years ago was absolutely spot on, and they've got a bit of luck that AI came in and started driving huge amounts of traffic there. So you can see EPS sort of starting to go up and drift upwards. This could be revised quite quickly. I haven't had time yet. I'll probably do it Thursday, but there's a big move that companies are looking at CPUs now for AI, and saying before they needed, for every one graphical unit that they were using for actual AI work, they needed maybe half a CPU. That's more getting to 1-to-1 and even 2-to-1 sometimes in favor of the CPUs. So this is where Intel is also starting to gather, because they're actually getting some real interest from people in their CPUs. You can see here, they're pretty much at their growth level for this year. So if you bought them, they're at a P of 70, which for Intel is almost Tesla levels, because they have been, that reputation. Yeah. There is still some upside for next year, but it's one that I wouldn't chase too much higher, in my opinion.
Let's talk about something that really has changed then, because we're going to look into AMD that comes with numbers today. And Liam, what to expect from a company that has, I don't even know how many percent that it's jumped over the last year or so. It's just crazy.
Yeah, just last month, I think it was something like 90%, something like that. It's just have a
there you go. But is there anything left in the tank for them in that sense when they come
they
with
took
earnings?
A hit yesterday. They're down. You can see 5% down. Yeah, they were up 71% in April.
You have to share again.
There's a new button in this software that I don't particularly like, but yeah, so there we are. So it's up 73% this month, and they're down 5% since yesterday. I don't know what they're doing today, but the reason for that is because there was, I think it was Bank of America came out with a research note saying it's all well and good, everyone's piling in to buy their CPUs and their technology, and they've got AI chips as well that they're trying to produce. It's all great that they've got all these orders and all this interest, but no one's actually answered who's going to make them at the moment, because as we just talked about, TSM are quite busy at the moment with one of their competitors. Samsung are pretty busy because they're also in the memory area, which is probably better for them than the GPUs. Intel is still looking at these things, but they're sort of arch rivals for Intel. So I can't see AMD working with Intel in that regard. So where are they going to get the chips made? And that was enough to make them drop 5%. To be honest, I expect pretty good things. They're a good company. What most people don't realize, they don't actually make the chips. They actually make they design the chips and then get someone else to do that for them. So it's an interesting one. If they can give us a good order book and actually give us that answer to who's going to make this stuff, then there's some pretty good growth in there, even towards the end of this year and the next 8 months, and even more next year. So, but otherwise they could have a bumpy road, because they really are priced quite highly, and again, 71 PE is pretty high for them.
We shall see when they report for Q1 later today. By the way, they're up 1.4% right now, whereas Intel is up by a measly 12.25%. So yeah, that's how it goes on the market right now. Hans-Henrik, let's go back to a story that we talked about yesterday, and we use that expression quite a bit when it comes to stories like this. We scratched our head and said, what on earth is going on? GameStop buying eBay. And then there was I would say in that sense that if you have any interest in that sort, look up the interview that the GameStop CEO did yesterday, because that was Monty Python-esque
Yeah,
at
well,
one
they
point.
basically, the two interviewers on this finance channel basically asked the CEO of GameStop the same thing that we wondered yesterday. They said, you have 9 billion on your books. You have you can borrow hopefully $20 billion from a bank. It's not completely certain yet. Where should the rest of the money come from? And they are
Yeah, they were going to pay 57 billion,
pay
so
with
there
some.
was a little
They're
bit
going
of
to
a
pay
gap.
with some GameStop stocks that they already have, and then they are probably going to dilute the stock by printing some more stocks. Basically, he couldn't ask, and he looked, I don't know, drunk or high or both. I don't know. He didn't look like he wanted to be there, and he kept saying, "You can read it on our website," which not is the smartest call when you're one of the high-profile finance channels. However, what we said yesterday was, this is terrible. Let's see if we can get this up. We did say that, let's just find the eBay one here. We can see what it does today. We did say yesterday, when it went up here, that it should have been up at 125. That was their offer. They wanted to pay $125 for each stock. Let's see. And they only went up to 109. So what we said, and what I actually wrote out to our members this morning, was, if you're in eBay, I think I would sell now, because you're not going to get a much better deal, because GameStop is not going to find the money. Right now, it is down 3.5%. I think it will go down further. However, eBay is actually a reasonably good stock, quality of 86. They have some gains in their earnings per share and their revenue. They have low PEG ratio. They have good solid cash flow. They can pay the interest rates. It's a solid company, and they are showing some decent growth. So if they can drop a bit back, I actually wouldn't rule out completely taking a position in them.
We're going to add a little chapter to the saga here about GameStop and eBay, because Michael Burry, he sold all his GameStop stocks, and he's now buying PayPal, and PayPal is down 10% today. Can you make any sense of that?
Michael Burry, or just the fact that we're all in here?
What I just
yeah,
said.
I mean, the thing is with Michael Burry, when everyone talks about this stuff, he's an incredibly intelligent guy, and he will use options, like, because he's a master of them, effectively. So we don't actually really know what his position is. How long it's going to be in for, what sort of call option, what strikes he got, or anything like that. So, it's always difficult when you hear that one. But from a PayPal point of view, I mean, as a company, it's a decent quality company. You can just see, again, quality score of 95. Earnings go down this year and then up, which we never really like too much, which is why we haven't got a PEG ratio. But everything else, really, really strong. Free cash flow is pretty good. Returns are pretty good. So absolutely great there. But those sort of lack of growth in earnings are really pushing the stock just sideways and down. They peaked in 2021 and have gone straight down. I know we talked about this earlier on internally, and I don't particularly like the stock because of this red sort of line down here. That's the worst case scenario. It was there, a month and a half ago, 2 months ago. So there's no reason why it wouldn't go down there. So our downside is really 20 to 30%. And the upside is pretty good. I totally agree. But I don't quite see where Mr. Burry is coming in on this one.
We're definitely going to talk more about them, because just a couple of days ago, they reorganized and they pushed their things into 3 new business units, new leaders and stuff like that. We'll keep an eye out for them. One thing that Hans-Henrik does is every morning he keeps an eye out for us, in that sense that he keeps looking at the macro side of business. And one of the things that popped up and keeps popping up almost every day, Hans-Henrik, that's the rising rates, especially in the US. But there was a story this morning about the Australia hiked their rates again to fight inflation. Last time I checked the globe, Australia is still there, which means that we're on the same globe as them. How come we are not getting rate hikes?
Definitely, and we will see higher inflation. I know there's some people out there saying it's not the case, but we will. Australia have had high inflation already. I think it was 3.5% last time, and then it went up to 4.6%, something like that, the other day. They are being extremely hardly hit by the Hormuz Strait thing. There is, I think it's 20% of the gas stations down there that are simply out of gas, something like that, 15-20%. So they have a tough time right now. We are basically seeing the same, just with a delay here in Europe and in US. Something that we did notice as well. This spaghetti chart here is, here we go. That is the US interest rates. These are for 1 month and 6 month bonds, one year and so on. The yellow here is 10 years, and up here we have 20 and 30 years. So what I tried to do was to put a red arrow on this chart for every time Trump tacos. That could be in the Liberation Day tariff war, when he all of a sudden decides, oh, we are giving them a 90-day extension or something like that, a ceasefire with Iran. But every time he has done this, the interest rate for the 10-year bond had been above 4.4%. So in this area, he did a taco here as well. He did one here. It was not over 4.4, but it was rising really quickly. And right now it's over 4.4% again. That is a problem if you have a debt of $39 trillion and need to refinance $9 trillion this year. So right now, one of our members asked, do you think they will escalate the war down there? I said, no, absolutely not. He can't afford it, because with the interest rates at 4.4, he's going to play the nice guy for now. If it drops a bit, he might escalate. But we saw it yesterday when there was an attack of a South Korean ship. He basically said, yeah, well, it was barely a scratch and it's just a flesh wound. Come back and fight, you chicken. And so, the entire song and dance there. So I think we can say for fairly safely that he's not going to bomb anyone down there right now.
If you want to know more about the macro situation that Hans-Henrik brought up here, then take a check on his market scanner. Comes out every morning just before 9 o'clock. We're coming towards the end of the show today. We still have one thing left, and that is the number of the day, 59% versus 41%. This is the share of US consumer spending. The top line, the 59%, represents the top 20 earners in the US. That means they spend 59% of all the money, whereas the bottom 80% in the US only spend 41%. I would say, gents, isn't that a representative of how it's going in the US at the moment?
I think it's been like that for quite a while. Yeah.
Yeah, it is that K-shaped economy that people are talking about. It's one of the things that we have been keeping an eye on, because we can see that the retail trades, the consumption in US is actually okay, considering the situation. And we have wondered a bit why, because we know they are stretched over there. But that is the top 10, 20, 30% that is basically spending all the money. They are spending a lot of money because their stocks are doing very well right now. So if we see a deeper dive, a longer term dive in the stock market, that could actually be a hit the consumption in US.
Maybe that's why Ferrari did okay with numbers today. That could be a sign of the K-shaped recovery. We have interesting earnings tonight, as Liam has already told. AMD is coming with numbers, MicroStrategy, super microcomputers. There's a lot of interesting numbers coming. And Liam is coming back on Thursday, 4 o'clock, and that's going to be with Tech Thursday for sure. And I just want to say, stay on our Facebook pages and add our YouTube channel, because in that sense you will be updated with exclusive news from Liam Flavelle and Hans-Henrik Nielsen in regards to everything that's in regards to the stocks. We also analyze stocks every single day and try to find the winners and drop the losers and keep you posted on that. Thanks for joining MyStockScanner Live. Follow us on Facebook, subscribe on YouTube, and we will see you guys on Thursday to another English edition. Hans-Henrik and I are back in a little over 31 minutes with the Danish edition, and we will also be back tomorrow at 5 o'clock in the afternoon. Thanks for being here, gents. We'll see you, Liam, on Thursday. Hans-Henrik, we have a date in 30 minutes.